Do you need to master the entire accounts payable and vendors part of QuickBooks Online? Maybe you're a vendor manager managing the expenses of a company and need to be able to record transactions and manage vendor reports. Maybe you're an accounts payable clerk who needs to know more about how to manage accounts payable in QuickBooks Online. But for whatever the reason, this free video right here on YouTube is going to give you all the knowledge and skill you need to completely master everything about the vendors and accounts payable section in QuickBooks Online. My name is Mark Smolin, and I personally guarantee you the clearest possible explanation for every possible vendor and accounts payable idea that you could possibly need to learn when using QuickBooks Online to manage your bills. In fact, if you really want to learn well, I'm even going to show you a way that you can follow along with me step by step for better learning. So, I suggest you simply watch this video a little bit every day, and by the time you're finished, you will have completely mastered every idea you need to learn to manage your vendors, keep your expenses and bills in line, and be able to objectively prove that your entire set of vendor records are correct to the last detail. So don't delay, start watching today. Thank you for watching this very special presentation about vendors and accounts payable in QuickBooks Online. And as promised, we're going to learn about every possible transaction type that you could possibly have when managing accounts payable and vendors in QuickBooks Online. So maybe you're a small business owner with very complicated transactions that relate to your vendors and your accounts payable records. Or maybe you're someone who just needs a job being an accounts payable clerk or managing the vendor section in QuickBooks Online. But for whatever the reason, I'm going to guarantee you that we're going to cover every possible transaction type there is when dealing with vendors and accounts payable in QuickBooks Online. We're going to learn all about prepayments, advance payments, and job deposits that you pay to your vendors so you can record them the way that you need. We'll learn all about how QuickBooks Online prints checks, and we'll also learn how to record each of the different discount types that vendors can offer you when doing business with vendors. We're also going to learn how to manage vendor reports and how to reconcile with your vendors and the statements they give you so that you can objectively prove that your entire set of QuickBooks Online records are correct to the last detail. And even though you can simply watch and learn all the concepts and ideas you need, there is still a way that you can follow along step by step. If you look down in the description field of this video, below the table of contents, there are links that you can sign up for free for QuickBooks Online. And if you sign up with a blank, brand new QuickBooks Online account, you can then look under that link to download the list of transactions that you would need to record in your new QuickBooks Online account so that your numbers can start with the same numbers that I have so that we will have the same things and you could follow along step by step and repeat exactly what you see, and your numbers in your account will be the same as mine. Some people prefer to learn that way, but it takes a little time to set up. Either way, you will perfectly learn everything you need to learn about vendors and accounts payable and managing every transaction type and every report you need regarding QuickBooks Online. Now, before we jump right into the material, I want you to know that there's one particular topic that overlaps into both accounts receivable and accounts payable. The topic of billable and reimbursable expenses is something that does not require you to learn additional transaction types of accounts payable and vendors because we will be discussing every different transaction type. The topic of billable and reimbursable expenses only adds additional data to each of your vendor transactions. So I thought it was wise to make a completely separate video about that one topic, billable and reimbursable expenses to clients and customers. So that's another link that you can look for down in the description field if you need to know that knowledge when managing your vendors and accounts payable. And now that I've told you that, you can be sure that I've provided for you everything you could possibly need in the area of accounts payable and vendors in QuickBooks Online. So without further delay, I now present to you this wonderful accounts payable adventure.
Chapter 3: Attaching Files to Transactions.
Every document in QuickBooks Online has a paperclip icon right at the bottom, and it allows you to attach any kind of file right to that transaction. And you can reopen the document to see the file and see what you put. Now, when you attach files to transaction documents, usually the file you attach is the source document of the transaction, like the receipt from a petty cash transaction and so on. For example, let's imagine on April 6th, we paid $80 from petty cash for a delivery from UPS. And UPS gave us a paper receipt that we scanned into our desktop as a picture file, like a JPEG or a TIFF or whatever it is. Now I'm going to show you my example receipt is right here in this folder for everything I need for this course. And here's the example receipt from UPS that they're talking about. Let me double click. This is a simple example of a picture receipt that could look any way UPS needs it to look, but the name is UPS receipt. So I'm going to record this transaction, this expense from petty cash on April 6th, and I'm going to attach that receipt. Very simple. From the top left, we click New, and we go over to Expense. We make sure that we're paying from the petty cash fund, and we paid UPS. And of course, we're going to look at the receipt number and type in the number on the physical receipt. Well, I didn't put one, I just put blah, blah, blah. So you put whatever that is. But notice, this is unrelated to bills that we received from UPS. It's a simple cash transaction. So I'm going to close the right panel, and I know that this is delivery expense, DE. And of course, very important that we put the date, April 6th of 2025. Okay, the amount was $80. But the most important thing is when you scroll all the way down. Notice you have the attachments right down here, and the blue text that you hover over to get a link, see, becomes a hand. Double click and it will open up your file in your computer, or your folder rather. Now if I click desktop and I search for my A Advanced Students, and I go to the revised course here and I look for the receipt, see, UPS receipt, double click. And after it uploads, you can see it's right here, and you can hover the mouse over and click on it, and it'll open up it'll open up in a second window, and you can close out the window and use the same browser right here. See, watch how it opens up in a different window. Boom. It opens a second window automatically to show the picture. And now that it has everything we need, we can click Save and Close. And you can always reopen it instantly after saving. If I click here, it's the most recent transaction. I can click to open it up. And if I need to see the receipt, I scroll down, click right on the picture, and there it is. Boom. Now, another way that you can attach files to documents is to use the Attachments window. You can upload a file usually a picture of a receipt, to this window before you attach it to a transaction. And you can record the transaction after uploading and attach the file from the attachments window. So let's take a look at what the attachments window looks like. From the cog wheel in the top right, we click and we go over to where it says lists, and we go down to attachments and click. Notice we have our previous attachment that we attached directly to the document as we made it. And we can click to open it up and get the expense, and then of course click to get the document itself in the other window. Let's go back. But now we're going to upload one directly to this area. For example, let's imagine on April 7th, we gave Rex Repair $120 with a direct deposit into his bank account from our main operating account. He gave us a receipt on April 7th that we scanned into our desktop as a picture file like a JPEG or a TIFF or anything else. We will upload the receipt immediately, which means we're uploading on April 7th. But we did not record the expense until April 8th, even though the transaction was dated April 7th. So watch how this would go. We would click right up here in the top left corner, attachments, just like we did in the document. And we scroll to the picture of the receipt. So here's Rex receipt. I double click and give it a moment and it will upload. Now here it is in the document center. Now that it's already in the document center, I can record the expense to Rex dated April 8th. So I click New, Expense. And we're imagining that we did not have an opportunity to record it until April 8th. And this is an expense with Rex Repair. Notice we have prior bills that this transaction does not relate to, so let's close out the right panel. Don't forget to change this to the cash and bank account because this is a direct deposit into Rex's account. And of course, this is repair expense, $120. Now, we have to scroll all the way down and click Add Attachment. Now, we're not going to click Add Attachment because that will actually look in our computer. We're going to click Show Existing, and you can see if you click Show Existing, it would list all the documents that have not yet been attached to any other transaction. And now we can click Add, and the result is exactly the same. We can close out the panel, and if we're looking at this expense, we can click here, and in a second window, you will see a second window of the browser previews the picture of the file. Close it out. We're back here. Now all we have to do is click Save and Close. And we can open up that expense anytime. Even if we're not in the Document Center, we can click here to see the most recently entered transaction. And we can click to open up, and then all we have to do is scroll to the bottom and click right there on the name of the file, and there it is. Now there's one final very important point regarding files and documents. People always ask, how do you get proof of an online payment where all you did was pay through the computer and they showed you on the screen a confirmation number? Take this important tip because it will help so much if that happens to you all the time. I suggest for those types of payments, you take a screenshot. A screenshot can be proof of any online payment. And the way it works is when you see your confirmation number on the screen, you go to the top right of your keyboard and you press the print screen button. Now, that will take a picture of whatever happens to be on your screen at the moment you push the print screen button. Then you can paste it into any program that manages pictures.
Even a program part of Microsoft Office like Word or PowerPoint will enable you to click paste. And then when you click paste, you'll be able to crop the picture and use that file as proof of that transaction. So all you have to do is save the screenshot of the transaction confirmation number and then upload it as the attachment, just like we did in this video. I'm sure a tech-savvy person could show you how to take a screenshot. It's very easy, and you should practice using the pictures from the screenshot to save the files in the Files window. And of course, this is what the trial balance would look like after we record both of those expenses that had the attachment. Notice delivery expense has increased by the amount that we paid UPS, and repair expense increased by the amount we paid Rex, and these are the two bank account balances respectively, or bank type of account balances, that include both of the expenses that we just recorded.
Chapter 4. Printing Checks in QuickBooks Online.
There are 3 reasons why it's better to let QuickBooks Online print your checks rather than writing it out by hand. There are 3 reasons why it's better to let QuickBooks Online print the checks instead of writing them out by hand. First, it saves massive amounts of time. Secondly, it prevents issues with handwriting when people write out a handwritten check. And thirdly, it's more secure and makes the check less subject to potential fraud. So how does it save you so much time? Well, right now, you're taking anywhere between 30 seconds to a minute to physically write out each check by hand. Then you take more time to enter it into the computer. But wouldn't it be great if you only had to record it into the computer and let QuickBooks do the rest of the work? So if you had 500 or 1,000 checks each week, you would save several hours of physical work if you printed it from QuickBooks Online. But physically, how does it work? Well, it's very simple. All you have to do is click the Print Later button that's in the top left corner of the check window right under the check number field. That's what indicates to QuickBooks Online that this one will be printed instead of written out by hand. Once you click the check mark, you will not be able to enter a check number in the check number field. And that's because the check number gets assigned later when it prints. But you can still finish recording all the other data about the check and save the check, and it allows you to save the check without the check number. Then later, when you finally print, QuickBooks Online will assign a check number, and the check number that's assigned will be the check number on the check that physically prints from the printer. So that's the process, and that's the way it works. And when you click this check mark and save the check, this check will appear in the very special window, the Print Checks window. And it's the Print Checks window that allows you to manage the checks that you wish to print. For example, let's imagine on April 5th, we recorded paying Staples with a printed check for equipment. And the amount of the check is $100. Let's go ahead and record the first check that we intend to print. From the top left, we click New, Check. The very first thing we must do is click the Print Later button so it knows that it will not have a check number when we save it. It's coming from Cash and Bank to Staples, and the date is April 5th of 2025. We can ignore the previous bills from Staples because this check has nothing to do with those previous bills. So we can click the category, and this time it's EQ for equipment, $100. There's nothing else to put in this check, and we click Save and Close. Now, let's check the result in both places. When we click Reports and we go to the Custom area and hit the Trial Balance, we can click our Cash in Bank account, and we can scroll down to the very last transaction that we recorded on April 5th. You can see the check that we just wrote is right here, and it has all the other information that we recorded except for the check number. I'll zoom in a little, and you can see it has the date, and it has the transaction type, the name of the person. All the other information was recorded even though check number is blank. And now let's check the other place that this will show up. We will check the Print Checks window. From the top left, we click New, go to the column of Vendors, and go down to Print Checks. Notice the only check on this list is the check that we just made for April 5th for Staples for $100. Now this window is very helpful. It allows you to see all the checks, and it allows you to distinguish between those that are just checks and checks that are specifically for bill payments, and we'll learn about those checks later. You could also sort it if it's a very long list, so you can isolate the ones that you want to look at and double check before you print. So the first thing you have to consider is making sure that your printer lines up the way QuickBooks Online expects it to line up and prints all the data on the physical check in the right position on the check. The only way to be sure that that will work properly is to purchase the checks from the Intuit QuickBooks company. It is possible you could purchase the checks somewhere else and they might line up in the printer the proper way so that when they print from QuickBooks Online, all the data prints in the proper position, but you can't be sure unless you purchase them from the company that actually makes QuickBooks Online. Secondly, the checks must be placed in the printer in numeric order. I cannot stress how important that is. You will have a nightmare when you try to do your bank reconciliation if you do not print the checks in proper order. If you do not put the checks in the printer in proper order, then QuickBooks Online will record a different number on the check inside QuickBooks from that very same check that's physically printed out in the real world, and you will have a bloody mess. The third thing you have to be sure of is at the moment you tell QuickBooks Online to print the check, you must input the check number of the first check that will print. And that means that's the lowest check number in the batch that you're printing from. So in continuing our example, let's go ahead and print this check. I will print to a file instead of physically printing because the result is the same physically on the check when you look at it. You'll see exactly what it would look like if it were to print. And before I actually click to print, you should know that if it's the very first time you're going to the print checks window, you'll get a little message about printer alignment. And that message looks different every time QuickBooks Online does an update. So don't worry that I didn't get that message and I went straight to printing. Do me a favor, just click past the welcome message whenever it's the first time you're coming to a window in QuickBooks Online to be able to see the same screen that I have so we can follow through with the printing. Now again, it's very important that you put in the check number of the first check that will print, and QuickBooks Online will assume the checks are in the printer in check number order. So the example number I'm going to put for the first check is 61 Push Tab to save the field. Let's jump all the way up to check number 61 and click Preview and Print. Now when we click Preview and Print, you can see that what you're seeing here in the file is only what QuickBooks Online would print on the physical check. And anything that's missing from a check that you're looking at here is already on the physical check at the moment you put it in the printer. You're only looking at what QuickBooks Online will add to the check. And of course down here, it's what it will add to the check stub, depending on the style of check that you choose. And you could click Print, and of course this is the way the file would look. And notice it opened it in a second tab of the browser for you to preview it as a separate file. So I'm going to close it out, and I'm going to close the preview as well. But now this is printed. Now when you're done printing, it asks you, are you sure that it printed okay? And if some checks need reprinting, you would put the number of the checks that need reprinting, or you would keep everything here. So I'm going to click Done and assume everything is fine. And notice two things. Firstly, the check is gone from the Print Checks window. But secondly, when you come back to any report and look at that very same check, you will see the $100 check from Staples on April 5th now has check number 61 assigned to it as we printed. Now for our second example, we're going to see what it looks like when you print checks in a batch. Let's imagine on April 6th, we had to record these 3 checks that will be printed later. Now you can pause the video while you enter these checks, because I'm going to pause the video and enter them myself. But the only thing you have to remember as you record them is you must click the Print Later button the way that you saw. Once you do that, all 3 of these should be in the Print Checks window waiting to be printed. And when you finish, you can click Reports, Custom, Trial Balance, and you can open the Cash and Bank and scroll down to the 3 checks that you just recorded. You can see that these 3 checks on April 6th do not yet have a check number. So now when we go to print them, actually I'll zoom in a little just to be clear. These 3 checks, April 6th, no check number after check number 61. So now we click New and go to the column of vendors and click Print Checks. Now QuickBooks Online remembers that the last one we printed was number 61, so it assumes you can start at number 62. And if you agree, you can just leave the number there. If you don't agree, type in whatever the first check number is. And of course, you can sort them differently if in fact you have many. But right now, we will just click Preview and Print. Notice the preview shows all 3 checks together. And notice again, it shows only what will print on the physical check, and any information that you don't see is information that's already pre-written on the checks, including the check numbers themselves. And we click Print, and this is what it would look like if it actually came out of the printer onto a blank piece of paper. But if it comes out onto the printer to checks that are aligned properly, then it will be written out perfectly. Notice it's in a second tab from your QuickBooks Online, so you can close the second tab and close this out. Double check to make sure everything printed properly, and in this case we're imagining that everything did print properly, so we click Done. The window is now empty, and most importantly, when we go back to the reports to take a look at those checks that we just printed, We can now observe that the 3 checks on April 6th have been assigned these 3 numbers respectively. And we can double click and open up and confirm that the number has been assigned to the check at the moment that it was printed. Now I'd like to close with one great thing about this feature. You can reprint any check anytime you want. For example, if we spilled coffee on check number 62, then there's no need to void it and re-enter it. We can dispose of it right in front of us so we know that piece of paper is gone. There's no danger of fraud. We don't have to void it. We just need to reprint, and we'll reprint what was supposed to be on check number 62 right on check number 65, the very next one. Well, how do we do that? Well, it's very simple. All you have to do is double click and reopen the check that got mutilated, and all you have to do is click and place again the check mark onto the print later button. That's all you have to do. You don't have to do anything else. Once you do that, you can click Save and Close. And if you go back to the Print Checks window by clicking New, Print Checks, you will see that the $250 check on April 6th to Rex Repair is in the Print Checks window. It got put back because you changed the check mark. And notice it remembers where you left off, and it's asking you, do you want us to assign check number 65 to this one? And it would make sense that that's the next one in the physical batch, because 63 and 64 were printed nicely with no coffee spilled on it. So let's imagine you take check number 65, the physical check, put it in the printer, and click Preview and Print, and it works out perfectly, so you print it out, and that's all you have to do. And you don't have to cancel a check, you don't have to void a check. All you have to do is just know that there's no check number 62, there's no problem with it. Close this out, and when you confirm that this latest check printed fine, you could then close the print window and come back to the check itself, and you will see that now check number 65 has now been assigned to that same check, and you don't have to worry about a physical check being destroyed before you got a chance to send it out. And of course, we close by confirming the cash and bank balance and all the other balances on the trial balance, including the expenses that just increased from the checks we just printed.
Chapter 5. Payment Fees for Vendors' Bills.
Do you sometimes pay a fee when you pay your vendors' bills? Well, then you need to know how to record payment fees for paying vendors' bills. Usually, there is no fee when you pay a vendor's bill. And if there is a fee, usually the vendor pays the fee to process the payment. However, in rare cases, the one paying the bill pays the fee for processing the payment. This is especially true if you pay from your own platform, like if you want to pay from PayPal or you want to pay from Venmo. So what's the problem when this happens? Well, when you pay this way, the bank will deduct only one transaction from your list of accounts and on your bank statement. And that one transaction includes the vendor's bill payment and the fee. However, in your QuickBooks Online records, you have to make sure you record a different expense from the expense on the bill when you pay the processing fee for that payment. So what do? Well, the only real solution to this problem is on the day that you go to pay the bill and the fee, you first enter a separate bill just for the payment fee. The payee on that bill must be the vendor of the original bill, and this technique will work. This way, you can pay both bills by recording one transaction into QuickBooks Online, and that will satisfy both conditions that we spoke about a moment ago. For example, let's imagine on April 7th, we paid bill number 3210 from Verizon with a $15 payment fee. We must first enter a bill for $15, and the bill date must be April 7th. The expense on the bill should be the bank fees expense unless you have a specific expense for payment fees. And you can put in the description field the name of the pay platform if it helps you look at it later. So let's take a look at how to record the entire set of transactions in this case. From the top left, we click New, Bill. The vendor in this case is the same vendor of the original bill to get this technique to work. Now remember, the date must be the date that you're paying the bill, but in this case the expense is, we use the original bank fees expense because we do not have a separate expense for paying vendors' bills or processing fees or any kind of thing like that. But the amount in this case, $15, and you can type in PayPal or whatever you feel is necessary so that you can remind yourself of what this was if you reopen this later. We can click Save and Close, and now we're ready to pay the bill like normal. We click New, and we go over to Pay Bills. Now in this window, we want to filter all dates, and we want to filter only for Verizon. And when we apply, we can see we have the original bill that we're supposed to pay and this bill for $15. If you click the check mark next to both of those bills, the total amount of the payment that you're actually paying is $895, which is the original amount plus the fee, and that works out perfectly when you record paying both of these bills to the same vendor with one check. So when we click Save, everything is recorded properly. And I'm going to leave you with one final note. You should not edit the original bill and add the fee. If you do that, QuickBooks Online will record the expense of the payment fee as of the bill date, not the payment date, and that's not correct. The payment date is the correct date of the bank fee expense because that was the day that you got the service. So now the bank fee is increased by $15 and the bill payment is recorded as normal and the bill is closed. We can even close this window and go to Reports and look at the unpaid bill report in the custom area and confirm that Verizon has neither the bill for the fee nor the original bill that we were paying for. And of course, when we finish, we confirm the remaining balance in cash and bank, and if you scroll all the way down, you will see that bank fees has increased by the $15 that we had to pay just to be able to pay Verizon's bill.
Chapter 6. Cash Refunds from Vendors.
If you paid the vendor immediately upon receiving some service or product, then you recorded this in either the checks window or the expense window. Therefore, when you receive a refund and you deposit it into the bank, you have to record the refund check in the bank deposit window. And when you do that, you have to make sure that you choose the original vendor that you got the check from and the original expense account that was on the transaction that you're actually getting the refund for. So what happened when we originally paid the vendor? Your cash went down because you paid, and the expense that you were paying for went up. Therefore, when you get a refund, even if it's a partial refund, your cash in bank goes up because you're depositing a check from a vendor, and the original expense that was recorded on the original check or expense goes down because it has the opposite effect. For example, let's imagine on April 8th, we received a refund from UPS for the March 7th delivery that we actually received on March 7th. And we're getting only a partial refund of $150, and it was directly deposited into the bank account. So what will happen in the trial balance at the moment we record this $150 refund? Well, cash in bank has to increase by $150 because we just deposited a $150 check from a vendor, and of course, delivery expense would go down by $150 because we have $150 less of that expense if we got some of that money back. So we will use our good friend, the deposits window. From the top left, we click New, and we go to Bank Deposit. Now the date is April 8th of 2025. And this section here that has the payments to deposit or undeposited funds as they used to call it, we will disregard and not use. You have to make sure that you scroll down towards the bottom section of the deposit window and open this triangle by clicking on it so that you can see add funds to this deposit. So none of these will be checked off if you have undeposited funds, payments to deposit, and we're only using this section of this window. And we received from UPS. And the account obviously is delivery expense. And the amount is $150. And that's all we have to do. And here at the bottom, we click Save and Close. If we zoom in a bit, we can see that our cash in bank has increased to the $31,543.40 that we expected, and our delivery expense has decreased to the $5,840 that we expected. Now here's a question you might expect at this level. Does this transaction change the vendor's balance? And you should know that the answer is no. If the original expense or check did not increase or decrease what we owe to the vendor, then the refund should not. And then the question is, if it does not affect the vendor's balance, what would be the best report to view this particular transaction, specifically in the vendor records? And we all know the best report for that is transaction list by vendor. So if we come here and we click reports and we go to the custom area of transaction list by vendor and we go all the way down to our good friend UPS, you can see that the very last transaction was this deposit from April 8th, where we deposited a $150 check from this vendor. Now, in our second example, you should know that you can deposit the refund check with another check from the undeposited funds or payments to deposit. So let's imagine on April 9th, we received a refund check number 557 whatever from Staples for $100 worth of equipment that we paid on April 5th with check number 61. Now we will deposit this on another day with another check, and that other check is already in payments to deposit. From the top left, we click New, Bank Deposit. We make the date April 9th of 2025. Now, we can scroll down and put in the information about the refund check first. So we received from Staples equipment in this particular case. Remember, it has to be the same account that was on the original check or expense. So that's what we're getting a refund for, and the amount we confirm, $100. And the instructions say we're depositing it with Candy's check from March 14th. So Candy's check from March 14th is already in the window. All we have to do is click the check mark and select it so that the total deposit at the bottom will be equal to Candy's check from the prior undeposited funds payments to deposit and this $100 refund check from Staples. In fact, I think it does give a Staples reference number 5575. So if it gives a number, you should put it. And then we click Save and Close. And when we go to check the results in our favorite report, we see why we should never record a refund check from a vendor being deposited with a customer's check. Because if I go down to the bottom of Staples, notice that deposit is not listed here. And the only difference between the second example deposit and the first one is the first deposit that we made with UPS, we did not, see it's listed here as a deposit under UPS. That deposit that we made for UPS did not get deposited with another one from undeposited funds. And it does show up here. So if we go up to the section of Staples and we don't see the deposit, it means that it won't show up here if it's deposited with another customer's check. And we can confirm we did it right by clicking the magnifying glass and looking at the recent transactions. This was the $4,300 deposit on the 9th, and it's right here. We see the only difference is that Candy's check was selected along with the check from Staples. And our final trial balance should look like this. So don't move to the next video unless you have these numbers.
Chapter 7. Credit Memos from Vendors.
When vendors decrease what you owe them for a past service or product that was purchased, they usually give you a document called a vendor credit memo. The effect of recording this is exactly the opposite of when you recorded the original bill. So what happened when you entered the bill that you're now getting credit for? Well, accounts payable went up because when you record a bill from a vendor, you're telling QuickBooks Online that you owe more. And of course, the original expense that you recorded with the bill went up because you have more expenses if you owe money for services that you took. Therefore, when you enter a credit, it's the complete opposite. Accounts payable will go down by the amount of the credit because the vendor is telling you that you owe less. And of course, the specific expense that was on the original bill will also decrease because you incurred less of that expense if you are paying less because you just got a credit. So, in the vendor records, we usually apply the credit to a specific bill, and you can apply the credit at the moment that you pay the rest of the bill. That's the normal way to apply the credit. For example, on April 11th, Rex Repair Shop gave us $300 credit for bill number 8282 from February. Let's take a look at how to record it. From the top left, we click New, go to the column of Vendors, and go down to Vendor Credit. The vendor is Rex Repair Shop, and the date is April 11th of 2025. Now, as we discussed, it would be appropriate to choose the same expense on the vendor credit that was on the bill that we're getting credit for. And it would also be helpful to put the bill number that this credit should be applied to in the description field. The amount of the credit is $300, and that's all you have to put. Then click Save and Close. Now let's check to make sure that it had the proper effect. When we open the trial balance, we can double-click Repair Expense, and you can see repair expense has decreased by the amount of this vendor credit that is supposed to be applied to that bill, $300, lowering the balance of repair expense. And in addition to lowering the balance of accounts payable, you should also view this credit on the unpaid bills report. And we learned in the prior course, the unpaid bills report will show everything that's not yet applied. So these bills have not been paid, and this credit has not yet been applied to any particular bill. But that's going to change momentarily, because we're going to imagine on April 12th, the next day, we paid Rex Repair in full for bill number 8282, and we used the credit from the day before, April 11th. So, very simple. New, pay bills, just like we learned. Now we want the date to be April 12th of 2025. Okay, and we want the date filter to be all, we want the payee to be only Rex Repair. And then click Apply, and notice we only have 3 unpaid bills with Rex. Now look what happens when we click in the credit applied. Notice it tells us the total credit available for that particular vendor. In this example, we're using all of the credit, and when we push Tab, QuickBooks Online assumes that we're paying the rest of this bill at the moment we apply the credit available. And since we agree, we will click Save, and all the numbers will change accordingly. We can take a look at the unpaid bill report, and you can see that both the credit and the unpaid bill have both disappeared for Rex Repair. Now you may well ask, how does QuickBooks Online apply vendor credits when there are multiple credits? And that's the advanced idea that I'd like you to get from this video. You see, if there's more than one vendor credit available for that particular vendor, QuickBooks Online only shows the total available credit in the Pay Bills window. If it's less than the total credits that are used in one particular bill payment, then a proportional amount will be applied from each available credit. So for example, let's imagine on April 13, Con Edison gave us credit number 8472 for $200 for future use not associated with any past bill. And we know that the expense account associated with Con Edison is electric expense. So let's quickly go ahead and record that now. New vendor credit. It's on the 13th, and it's Con Edison. And we know that the expense account is electric expense, and the amount of credit they're giving us is $200. And yes, we identify each credit by the number on the document. And we can click Save and New because we're about to enter a second one. We're also imagining on April 14th, Con Edison gave us another credit with another credit number for $100, and of course they're always electric expense. So let's record this second credit memo so that we can participate in the example. And this one is only $100. And yes, each credit memo, it is true, should have a unique transaction number, just like we learned, 8491. Now, when we click Save and Close, we have a condition where Con Edison gave us two separate credit memos. So this is interesting. When we look at the Con Edison section, I'll zoom in a bit. Okay, we see 3 unpaid bills and 2 unapplied credits. Now, here's where the interesting part comes. On April 15th, we will apply only $100 to a specific unpaid bill. And you may well ask, how does QuickBooks Online apply the vendor credits at the moment that you go to apply? The answer is, at the moment you try to apply credit from several vendor credits, the Pay Bills window will first show you the total money amount of all open unapplied credits combined. That's the first thing it's going to show you. The amount of the credit you apply then will be deducted from the currently unapplied credits in a specific ratio. Let me give you an example. The way it works is that QuickBooks Online will divide the amount of the credit that you're applying to a bill. It will divide it by the total amount of all credits. And that number will be equal to the percent that they deduct from each open credit. And in our example, we're applying $100 credit where we have $300 total credit from the vendor. That means at this moment, if we choose to apply $100 while we have $300 available, that means we're applying 33% of the total credits that Con Edison gave us. And if we're applying 33% of the total credits Con Edison gave us to one bill, it will multiply that percent and deduct it from each open credit memo. So what that means is that we will apply $100 to this bill, and Con Edison will only take 1/3 of each of the 2 credits as it applies. So take a look how it works. We go here and we click New, Pay Bills. Now, we want April 14th in our story, or I think April 15th. Let's go back. Yes, it's April 15th, okay? The day that we're applying the credit, but we're not paying any bill. Now, we filter by the vendor, and the vendor is Con Edison. And we see these are the 3 unpaid bills. Now watch. We want to apply only $100 to this bill in the middle, bill number 8181. Now watch what happens when we click in the credit applied box. It tells me the total. It doesn't say you had $100 from one credit memo plus $200 from a different credit memo. No. It says the total. We are only putting a part of the total towards this bill to lower the balance, and we're not paying anything today. So we apply 100 and we push tab. Now QuickBooks Online assumes that we're paying. So we have to remove the payment amount and put 0, because normally we would apply a credit when we're paying a bill. So leave the check mark on the left. Make sure you only put in the amount that you're applying, and the payment should be 0 if you're only applying the credit and not paying. Now, we're using 100 of the 300 that was available. Now look what happens when we click Save and we go back to the Unpaid Bills report. When we go down, we can see that the 2 original amounts of the vendor credits have been reduced by a proportional amount. We used only 1/3 of the total credit. So QuickBooks Online deducted 1/3 from this credit and leaves only this much available, and deducted 1/3 from that credit and leaves only that much available for the future. So that's how QuickBooks Online manages multiple vendor credits. And as always, make sure you double check the important numbers in your trial balance before moving to the next video.
Chapter 8. Receiving refunds for a paid bill.
If you get a refund from a vendor for a past paid bill, recording that requires more steps than refunding a check or expense transaction like we learned in the prior video. And you may well ask, why? Well, that's because sometimes you need to show the effect of the refund in the records that show the vendor's balance. If you use the method from the prior video, that's the information that will be missing. Sometimes there's a large time difference between the moment the vendor granted us the refund and the moment that they can actually pay. And in the interim, this needs to be reflected in the vendor reports during that time. So, what are the specific steps for recording a refund for a paid bill that came from a vendor? Well, first, you must record a vendor credit for the bill that the refund payment was supposed to be applied to. Then you have to record a deposit, and when you record the deposit, you will use the same deposit window we learned about before, but in the Received From field, you will put the name of the vendor. And then once you do that, both of these transactions will show up on the Unpaid Bills report. And then in order to get them to wipe each other out, you do step 3. You apply the deposit to the credit memo by making what we call a $0 payment. And that's because usually credits are applied at the moment the bill is paid, so the only way to apply a credit or a payment to a bill would be in the Pay Bills window, even if you're only applying and not paying. For example, let's imagine on April 16th, we received a refund from Con Edison for bill number 6161 for the full $1,000 of that bill. The refund was directly deposited into the bank account. So we do these 2 steps first. We'll record the credit and then we'll record the deposit. So first let's record the credit. From the top left, we click New, and we go over to the column of vendor and we click vendor credit. And the date is April 16th of 2025 in this example. And the vendor is Con Edison. And of course, Con Edison gives us electric expense. And the amount of the credit is $1,000. Now, you should put in the description field the bill number or any information that will help regarding how this credit is supposed to be applied or what the credit's for. You have plenty of space there. But as soon as you record this credit, it will appear on the Unpaid Bills report. We click Save and Close, and then we go Reports, and we go to our custom reports and open the unpaid bill report, and the first vendor here, Con Edison, now has this $1,000 credit that we just made. Now we do step 2, make a deposit for the money we actually received. So we come here, and in the same deposit window we learned, new bank deposit. And of course it has to be the same date as the credit, because that's the date that we're actually depositing the money into the bank account. Now, we will skip the top where it has the payments to deposit undeposited funds, and we will come down to this lower section, add funds to this deposit. And the most important thing is put the vendor's name in the received from field. And in this case, it's Con Edison. Okay? Now, you must be very careful. Do not put electric expense. Do not put electric expense. The electric expense was already reduced when we recorded the credit. We now have to fix the account, accounts payable. Accounts payable is the account that is being reduced, well, actually, being increased by this deposit because a vendor is paying us instead of we paying them and lower the balance. And the amount of this bank deposit that will change our bank account on the 16th is $1,000 from this vendor. Push tab. Now, we just recorded a $1,000 deposit for that vendor. Save and close. Now, when we come back to the open invoice, the deposit shows up as a positive because remember, when we pay the vendor's balance goes down. So when the vendor pays us, the vendor balance goes up. So it's positive. This credit is negative. So therefore, the final step would be to, before we do the final step, there's something really important we have to do. Because you see the way the unpaid bills report looks right now? This is what we have to save. We could export, we could print, we could save it as an Excel file or take a screenshot. But we need something that shows that this deposit that we got the refund for was applied to this credit, because we already know that this credit decreased the original bill of $1,000. So what do? Well, after we print it or take a screenshot, we're going to do step 3, and both the deposit and the credit will disappear forever. That's why we have to print it before we do our third step. But our third step cleans up the report so it can be perfect going forward in the future. So we apply the deposit to the credit with a $0 payment. So before we do step 3, let's just recap the entire context. The original bill, when it was recorded, made the related expense and the vendor's balance and accounts payable go up. And we learned in the video about vendor credits that when we record a vendor credit, the expense from the original bill goes down and the vendor's balance and accounts payable also goes down. Now in step 2, when we deposit the refund check, obviously our cash and bank will go up. But what will also increase is the vendor's balance and accounts payable. And that's because when we pay a vendor, the balance of the vendor decreases. Therefore, when we receive from a vendor, the balance of the vendor increases. So now we have the credit memo decreasing the balance, and we have the deposit from the depositing the check increasing the balance. Now, step 3, you're going to apply the vendor credit to the refund check of the vendor that we deposited. And they should cancel each other out and correct the vendor's balance. And when you look at the unpaid bills report, you should see neither the credit nor the deposit. So, We apply the deposit to the credit with a $0 payment, done on the same day. We click New, and in the vendor column we click Pay Bills. Now, we want to filter by all dates, and we only need Con Edison. Good. Now the date will make 1 day later when we actually apply. Let's make it April 17th of 2025. Now, watch carefully because we learned about credits in the prior video. So once we click right here in this bill, you can see there's $1,200 available. That's $200 leftover credit from the prior video and $1,000 credit available for the new credit memo that we just made. So this entire thing here is the deposit. That's why it's listed as a positive number, and the credit only shows up when we click in here. So when we click the check mark, we're applying $1,000 of the credit to this deposit, which makes sense because the credit memo that relates to this deposit is $1,000. And we will leave the $200 that was there before for some kind of future transaction, but right now we're applying that specific credit to that specific deposit. And that's all you have to do. And when you click Save, you can close this window and go back to the unpaid bill report, Reports, Unpaid Bills, and you can see in the section of Con Edison that the deposit for $1,000 is gone, and it has apportioned that amount to these credits accordingly, just like we learned in the prior video.
Chapter 9.
And don't
Receiving
forget to
discounts
check
from
the trial
vendors.
balance and make sure
Discounts
all your
from
numbers are the
vendors
same
are
as what you
usually
see
not
here
tracked in a
before
separate
you
account,
move on the way they are when we manage discounts with customers. If you need to, you can make an account for each type of discount that you will take and enter them as a reduction directly on the vendor's bill. You see, there are really two different kinds of vendor discounts. Let's call it a good customer discount, which is like a general type of discount that a vendor would give us. Now, when we put an account in the chart of accounts to track this, which again, most companies don't, in our example, we'll choose Other Expense so you can see the way it looks on the trial balance and in the profit and loss so that you can decide for yourself how you would like to classify your discount type of accounts. But in accounting theory, any kind of vendor discount is a contra income type of account, which means it belongs in the income section. But we won't do that for the good customer type of discount. We will do that for the other type of discount, early pay discount. You see, in accounting theory, early pay discount is other income because we earn the income by paying early. And that's why accounting theory supports that account type. So in theory, it's contra income, and we will classify early pay discount as other income, and we'll let the good customer discount be the other expense. And you can look at the result of both of them and decide between you and your accounting people which type of classification you would like to make your account. So let's add these two accounts to the chart of accounts now. From the top right, we click the cog wheel and we go over to the chart of accounts. Now we click New, and the first type will be expense, and it will not be the normal type of expense up here. We will scroll down to Other Expense. Oops, excuse me. And since there is no detail type that really fits it as a discount, then we should just basically put Other Miscellaneous Expense as the detail type for the tax form section. And now let's type in the name Good Customer Discounts, and don't forget to push vendors to make sure we can distinguish this from our customer-related discounts. Now, after we click Save, we'll put the other discount on the list as other income. So we click Income because that's what it is in accounting theory. Now, we'll leave it in the top section of income because in accounting theory, that's where it belongs, especially if you have a merchandise business. And that's what we studied. But as far as the detail type, at least in this case, we are allowed to choose discounts or refunds given. Okay, and we'll put early pay discount dash vendors. And now we click Save, and we can confirm these two on our list by choosing to see only the accounts created by us. Here it is, early pay discount, and down here, good customer discount vendors. And our first example will be using the good customer discount account. Let's imagine on April 18th, we received the telephone bill from Verizon, number 7654, for $650, and they decreased the bill $50 for the good customer discount. Well, we know we have to enter a bill, new, go over to the column of vendor and click bill. This is April 18th of 2025. And we see that the vendor is our good friend Verizon, and we should put in a bill number 7654. And of course, telephone expense. Now, the amount of the service, the amount of expense we incurred is the full amount of the bill because that's the service we took. But what we do on the very next line is we choose good customer discount, specifically vendors. And if you keep typing, it'll filter. And what you do is you put a minus 50 under the 650. And then you push tab. Notice the overall bill decreases and the individual amounts are recorded in their proper accounts. So after we click Save and Close, we can come right here to the trial balance, and we can see that good customer discount for vendors, dash vendors, so let's make the name a little bigger by dragging the column. Aha, down here, see it? Here, you can see it appears for the first time, the vendor-related discount right at the bottom as a credit on the correct side because it decreases our expenses because we put it in as a minus. However, if we look at the unpaid bill report in the custom section, we can see that the bill, or let's say the balance of the bill, in this case for Verizon, is only $600 because the amount that we're asked to pay or the amount that remains unpaid is $600. So now let's do an example of an early pay discount. We only take the early pay discount at the moment the bill is paid. The person recording the bill payment must compare the listed terms to the date of the payment and then determine if the discount is still available. If it's available, the person has to reopen the bill, calculate the amount of the discount themselves, and record it on the bill, and then you can pay the bill. So, let's imagine on April 18th, we received the supplies bill from Staples, number 6116, for $850, and the terms, as we learned before, were 2% discount if we pay within 10 days of the bill date, and if we don't, then the full amount is due in 30 days. And this set of terms is already on the terms list, and we already learned in an earlier customer-related video how to add terms to the terms list. So let's go ahead and record this bill. From the top left, we click New, Bill. And the date again is April 18th. And in this case, the vendor is Staples, and we are buying, in this case, supplies. Now, the bill number might be important, and the amount is $850. Now, the most important difference between this bill and all the prior bills that we entered are the terms 210 net 30. So we click in the terms and we choose the terms that are already on the list, 210 net 30. And on the day we enter the bill, that's the only difference between entering this bill and any prior bill that we learned about. Save and close. Now we can see the bill has been added to the unpaid bills report in the section of Staples. And here comes the interesting part. On April 19th, we paid the Staples bill from April 18th, the day before. And remember, we have to calculate the discount ourselves if, in fact, we are entitled to the discount. So, from the top left, we click New, and we go over, and we go to Vendors and click Pay Bills. Now, we want the date to be April 19th of 2025. And we want to filter by all dates, and specifically our good friends, Staples. Apply. Good. Now, we can see the last bill is the one right here at the bottom, and we don't yet know if we're going to take the discount, and if so, what the amount will be. But what we have to do is compare this payment date to the terms on the bill. So we can easily double-click right on this bill and look at the terms. And if it is within 10 days of the date of the bill, which it is, because we're doing it the next day, we therefore conclude that we are in fact entitled to the discount at the moment that we pay. So we have to calculate 2% of $850 and put that as a minus number under the amount. And I happen to know that is $17. And the account that the $17 gets recorded in is the early pay discount specifically for vendors. And notice the $17 lowers the balance of the bill to $833. Now we click Save and Close. And at the moment that we go back to the unpaid bills report, you can see that we have this bill for Staples down here, sorry for Staples, and we see that this bill has been changed, you see. This bill is now $833 only because it's about to be paid completely. So there's a brief instance between the moment that you put in the discount and the moment that you pay. You might want to print this or print the screen or save some kind of indication that this bill has been lowered because now it's about to be paid. That's the reason the discount was applied. So we click New and we click Pay Bills and we find the bill we're looking for. We can actually, we got to go forward to the date again. Filter again by our good friend Staples. Okay, now we click the check mark to pay $833 because the $17 discount was applied and given exactly at the moment before the bill is paid. Now we click Save, and now we can see the bill has completely disappeared from the unpaid bill report. So we go back to unpaid bills, and it should be completely gone because we only apply the early paid discount at the moment that it's paid. So you can see it's gone. But when you confirm your final trial balance, you can see that good customer for vendors, that's on the credit side for $50. And you can see the early pay discount for vendors is up here. Now, the most important place to check in order to decide how to classify your vendor discounts would be the profit and loss. So let's really scrutinize how these accounts look on that report. We click Reports, and profit and loss was not one of our custom ones, so we go to Standard and we go down to Profit and Loss. Let's just make it all dates the way we usually do. All dates, run report. Now go to the bottom of the profit and loss and look. You see, we chose to make the good vendor discount or the good customer discount for our vendors an other expense, which means after the normal net income from operations, it's deducted out. But look how it looks when you do the early pay discount. This, in accounting theory, belongs in the income section because we earned this, you see. And that's why it increases income. This one we chose to be at the bottom below operating income because we told QuickBooks Online that this is not the normal way we save money on expenses. So you can make your choices for either of these two types when dealing with vendor discounts.
Chapter 10. Prepayments and deposits to vendors.
Sometimes vendors require that we make a down payment similar to leaving a deposit before they give us the service or the product that we are paying for. The vendor records must show and explain this clearly, so it can be clear what future services each vendor owes us and how much. Now, the way we do this is called the check to accounts payable method. When prepaying for a vendor expense to a vendor, we use the checks or expense window just like we learned in prior videos. But in the category field, we put accounts payable. We do not record the expense or put the expense that represents the service we're giving. If we're paying in advance with a check or an expense, the category account field is accounts payable. The vendor's balance will become negative, and that will reflect the fact that they owe to us future services until the services is rendered from the vendor. When service is finally rendered, we enter a bill for the service on the day that the service was given. Then we apply the accounts payable check to the bill that was entered on the service date. So these are the 4 steps. For example, April 20, we paid a new vendor, Risa's Repair Ranch, to fix our equipment. We paid her with check number 8795 for $500. She agreed to fix the equipment on or before May 31 and will notify us when she is finished. So why don't we put repair expense at this moment? Well, that's because Risa did not yet repair the fence. It's April 20. All that happened was she took a check and promised to pay in the future. So let's record that check. From the top left, we click New, Check. And the date is April 20 of 2025.
Now we have a new vendor that we already learned how we can add a vendor on the fly. Or all we have to do is click Add New, and let's just put in only the name, and if you want you can come back and put in the address and other information the way we learned in prior videos. And we push Tab, and in a real situation we would put the other information, but for now just click Save, and now we have the vendor. Now the amount it says is $500, and the check number is we actually paid a 8795, so maybe we're using a different checkbook. Now the most important thing is the category here. The most important thing is the account that you choose from the list. And the reason the account is accounts payable is because it simply decreases the vendor's balance and makes it negative. Because all that happened is we paid the vendor and they owe us the money. So both cash and accounts payable goes down. So we type in ACC and it's accounts payable. Save and close. And when we take a look at the vendor reports, we can click Reports. And the most important one is the unpaid bill report. And when we check the unpaid bill report for the brand new vendor that we have, Risa's Repair Ranch, Risa now has a negative balance in accounts payable, which means she owes us for the future service. So now let's imagine it's the next day, April 21, and Risa returned our repaired equipment good as new, and she gave us a copy of the paid bill. So now we have to enter the bill normally. So all we have to do is click New, Bill, and we got the bill on the day that she finished, the next day, the 21st, from Risa's Repair Ranch. Now, of course, the bill would have a bill number and so forth, but the amount of the bill we know is the $500. Okay, now this is the moment that we have the repair expense. We have the repair expense when we actually got the repair. So we enter the bill normally whether we paid before or after the service. And when we click Save and Close, we can come back to the unpaid bill report and see Risa has a check that we sent her that made the balance negative and a bill that increased it and made it positive. And now we do the final step. We're going to apply the April 19th check to the bill we just entered to net out this vendor's balance. And that's the third step. So all we have to do is use our good friend, the Pay Bills window, just like we learned before. New, Pay Bills. Now, we want to filter it for all dates, and we want to filter it just for our new friend, Risa's Repair Ranch. So we only have this one bill, and there's no indication of the $500 credit that we should get for the check that we wrote. But remember, when we click inside Credit Applied, we see that the check gives us $500 of credit that we can apply. So we type in and make sure the payment amount is 0. This is the same as we learned in prior videos when applying credits to pay bills. And now when we click Save, we can go back to the unpaid bills report and check the section of Risa. And we can see that Risa is no longer on the unpaid bill report because we have no unpaid bills or open credits for Risa because the two were applied to each other. Now that's all well and good, but I want to close with one more technical point. You see, it's very important for me to stress that this method is correct. And you may well ask why. Why am I asserting that this method is correct? You see, this method is correct because this method keeps all vendor record details correct at every single moment. And you must have your detailed vendor reports accurate each day in order to continuously manage your relationship with your vendors. The other method that people think is better is one that I won't even mention because it makes the chart of accounts correct but makes the vendor records inaccurate. But you see, you cannot accept having inaccurate records in your vendor records at any moment, or you won't be able to manage your relationship with them on a daily basis. But you see, the chart of accounts requires adjustments all the time anyway. Any moment you report your financial statements, there will be several required accountant adjustments anyway, and this will be simply one of them. So, the temporary difference in the chart of accounts is immaterial while keeping books and managing your relationship with your vendors. You see, all you need is a simple adjustment, and you only need the simple adjustment at the moment you make the financial statements. Before recording the down payment or deposit, your chart of accounts is accurate. And after you finally receive the service and apply the bill against the check, your accounts are accurate at that moment as well. But after receiving the down payment, but before receiving the service, the negative amount in accounts payable really needs to be reclassified as another category called prepaid expense. And it should sit there until the service is given. Now that adjustment would make your chart of accounts correct at the moment you report. So it's only one of many entries to make and then reverse. Here's the idea. Here's the moment we pay the deposit. Here's the moment we got the service. Now, if we make financial statements between the moment we paid and the moment we got the service and got the bill, this section here needs to be adjusted. You need to adjust during this time period for the difference in the accounts. And before you adjust it, it wrongfully says that it's a negative account payable. You have to fix it so that instead of being a negative to account payable, that piece gets reclassified as prepaid expense. Now don't worry, because if you need to report your financial statements, your accountant will know what to do. And you will need a CPA or someone who knows this adjustment when you go to report your financial statements anyway. And of course, we close by confirming the final trial balance, and I always urge my students not to move on until your trial balance is correct. This is the balance of cash, and this is the balance of repair expense after entering the bill, and the final accounts payable number is here.
Chapter 11. Reconciling Vendor Statements.
Vendors send us a monthly statement to declare what is owed to them as of the statement date. If our vendor and accounts payable records agree with the statement, then we declare that our records are correct and have been verified by an independent source. And in this case, the independent source is the vendor. If they do not, however, agree with the vendor records, we must then reconcile with our vendor until we determine the true and correct amount owed on each bill as of the statement date. So what are the steps to reconciling with vendors so that you can make your records correct? Well, first, we compare the unpaid bills detail report in QuickBooks Online to the related page in the vendor's statement. If you agree with each individual unpaid bill's open or unpaid amount as of the statement date, then you're finished. Congratulations. Your records match the vendor's records and you're fine. However, if not, and the records don't match, then you must compare each transaction since the last statement date and go one by one with your vendor's transaction list to find and fix any differences that you see between your records and what's shown on the vendor's statement. The best report to do this with is the transaction list by vendor. So we know about this. We know in the custom report area, there's a transaction list by vendor. And it's simply a chronological list of every transaction or event that you ever had with every single one of your vendors. And what you would do is you would get on the phone with the vendor and you would go to either the last transaction on the previous statement or the first transaction on this statement, and you'd go one by one and you check everything one at a time until you find a transaction that you see is different. And then both of you would double click and open it up and you would compare what you actually entered. Sometimes there's an actual attachment like a source document that's already part of the transaction, because it is the source document that both you and the vendor would look at to determine who recorded the transaction correctly and who made the mistake. And since the attachment is usually the source document, the original transaction document that somebody signed, that's the objective documentation to look at when deciding who entered the transaction correctly. Now, this procedure is great, and it will fix every mistake except one very special mistake that we need to focus on. What if the total balance as of the statement date agrees with your records regarding what the balance shows in the vendor statement, but the balance of each individual unpaid bill on the statement is different than the balance of each individual unpaid bill on your unpaid bill report? In that case, exactly what mistake was made and how do you fix it? And the answer is, it must be from a misapplied bill payment. Misapplied bill payment is the only challenging possible mistake in the vendor payable records. The vendor total balance will be the same. The vendor transaction list will even be the same. And the vendor's running balance will be the same, meaning the balance as of a specific date. The only indication of a misapplied payment will be different unpaid bill balances for the individual unpaid bills when you compare your report to the vendor statement. For example, I, Mark, your teacher, went back and purposely misapplied one of the Staples past payments, and then they sent us a statement. Now, this is what our unpaid bills looks like after your teacher ruined it by misapplying one of the past bill payments from Staples. And this is what their vendor statement looks like in the section of the section that shows the individual unpaid bill balances. And notice there's a difference. You see, we have the bill number 7676 as $1,095, whereas they have it as $500. A difference of $595, ours is too high. And you'll notice our bill number 8484 is $1,055, but theirs is $1,650. Ours is $595 lower, and theirs is $595 higher. So, but notice the total in both records is the $2,330. So therefore, there must have been a misapplied bill payment. So what are the steps to fixing a misapplied bill payment? Well, we have to open the transaction list by vendor. We have to call the vendor on the phone. We have to read each bill payment to the vendor one by one. Both you and the vendor have to open up each bill payment together to check and discuss how it was applied. And the person with the bill payment applied wrong must fix it in their computer. If the vendor fixes it, then they must mail us a correct statement that we can have for our records. So this is what ours looks like when we open the unpaid. When we open the bill payment, we see that this particular bill payment was applied to bill number 8484. And when they open that same bill payment, they'll see that it was applied to bill number 7676. And if we assume they are correct, all we have to do is change it. Now, when we pay, the check stub instructs the vendor on how we want the payment to be applied. So if we back up a little and say what actually happened when we sent the payment and how did a mistake happen, usually we instruct the vendor by putting on the check stub which particular unpaid open bills we would like the check applied to. And in this case, it's only showing one unpaid bill, but you would see several. And it would be the check stub when you do a bill payment that communicates to the vendor how we intend to apply. They might have other ideas, and they might have the right under your agreement with them to apply it differently from what it says on the check stub. And if they're the ones that are right, we have to fix it and make it the same as theirs. So when we look at this, ours compared to theirs, what we would have to do is uncheck the wrong one and recheck the correct one. Then after we save it, the individual unpaid bill balances should be correct, and our unpaid bills report should match the statement. And if we assume they are correct, we correct it in our records, which means before we save the bill payment, the check mark is in the right place, and then after we save the corrected misapplied payment, our unpaid bill individual balances should now be the same as what's on the vendor statement. So let's take a look. So imagine we are on the phone with the accounts payable person from Staples. So we go to the section of Staples and we can disregard any transaction because we know everything matched except unpaid bills. We can disregard everything except the bill payments. So we would open up the first bill payment we get to and compare it and see if it's the same. If it is, we would close it out and go to the next bill payment. And when we get to the March 13th bill payment, we will open it up and we can see that it was applied to the wrong bill. The vendor is telling us that this bill payment that we made on March 13th is applied to 8484, but it should be applied to 7676. Now you have to be careful when you uncheck the wrong one and recheck the correct one. It will assume you're paying the whole bill. You have to be careful. You do not want to change the amount of a previous payment, especially for a check that had already cleared. So make sure that if you uncheck the wrong one and recheck the correct one, that only the actual amount of the payment shows in the amount field and in the payment amount of that particular bill. And now when we click Save and Close and click Yes, we can actually check the results in the unpaid bill report. So we go back to Reports and we go to the unpaid bill report and we scroll down to the section of Staples, and we can see that now our unpaid bill balances match what they gave us on the statement, and therefore we have proven that our accounts payable vendor records are objectively 100% correct to the last detail.